A mere couple of decades back, a new country started to make its influence felt in the luxury goods market. So exponential was the influence of this country in the luxury goods market that that country, China, today occupies more than 1/3 of the total luxury goods consumption in the world. The growth has been exponential. There has also been growth in the luxury goods segment in the first world countries. There is a bit of noise at the very top, but what you need to focus on here is China and the first world and the exponential growth of China. China today has more billionaires than any other country on the planet. And social justice warriors should be very happy that China has by far the most female billionaires in the world today. Chinese outbound tourism has exploded. It has grown exponentially over the last few decades. And so rapid has been this growth that China has emerged from virtually nothing in outbound tourism to a status where China now spends more money in outbound tourism than any other country on the planet. Electricity production in China has grown exponentially. But this is what the Western media the leftist Western media likes to show about China. They want to show that China is slowing down, and they want to talk about reducing growth rate of China, ignoring the fact that China is growing from a different base every year. But also, as you can see, they start the y-axis in this Bloomberg chart from 6% to exaggerate a feeling that there is something wrong with China. There isn't. Chinese GDP has been growing exponentially, actually, throughout this period, and from virtually nothing, China has emerged to be a superstar in the international arena. Chinese manufacturing value addition is started from less than 5% of what it used to have in the world a mere couple of decades back. Today, China adds more value in manufacturing sector than any other country on the planet, even more than that of the United States. Now, what has been the end result of this? China was a nobody in steel production a few decades back. Steel production in China has grown exponentially in the last few decades, and today this country manufactures and consumes more steel than, by far more steel than any other country on the planet. Now, coal consumption in the rest of the world outside China has certainly grown in the last few decades. But the real contributor of coal consumption increase has been China. This is how copper consumption has grown in China. And Mr. Copper Gianni will talk more about it later. But this is how exponentially everything has grown in terms of consumption in China and as a result in the world. But let's try to superimpose this data on what was happening in the world during the same time. This is what the world's consumption of copper looks like. And what you can see is that while in the last couple of decades, copper consumption outside China might have stayed the same, China has been a huge, huge contributor in terms of consumption of copper. The end result is it's not just the story of steel, coal, and copper. This is the story of virtually every commodity. Chinese consumption has increased exponentially in the last few decades and has come to dominate the international economy. But really, people want to not talk much about China. They like to talk about Ethiopia and Rwanda and India because those are democracies. So why have I not mentioned the third world so far? Let's look at the third world. I don't know how many of you can see the third world here, but the orange line at the very bottom, which some people might have a hard time seeing, is the increase in consumption of metals in India. What India's curve is here is pretty much the consumption growth in the third world, except for China. In this slide to do with total metal consumption around the world, the real contributor has been China and the first world. But what we normally hear is, and this comes from a very recent article from The Economist, and this is what we typically hear, that the growth of the world economy is happening because of countries like Ethiopia and India. On the right-hand side are the fastest growing so-called economies, India and Ethiopia. China is slowing down according to them, and United States and Canada are struggling in the far left somewhere, not to be even thought about according to them. But let's look at the real numbers and see if what they qualitatively want to convey to the world is the truth or it's a lie. These are the GDP per capita of these four countries, what are considered to be the fastest growing economies in the world, Ethiopia and India, and the slowing down economy of China and the so-called stagnant economy of the United States. What does 8.5% growth rate of Ethiopia translates into? A mere $72 per year per capita. Compare that with how much the United States contribute with its so-called stagnant growth of 2.2%. The reality, ladies and gentlemen, is that the contributor to the world's economy is still the first world. It is not the third world, and the only third world country that is actually making an impact in the international scene is China. So people, investors should stop distracting themselves by thinking too much about what's happening in the economies of Africa or Latin America or the Middle East, and instead focus on China and the first world. That is where the consumption is. That is where the economy is. Now, that has been good so far about China, but what does the future hold for China? Most of these third world countries have had the tendency to get trapped in middle income trap. That's where Brazil, Venezuela, the Middle East, South Africa got trapped, and then their economies start to falter and fall. The question is China going to get stuck and get trapped in middle income trap, or it's going to continue to grow? And my thesis is, my view is that China will continue to grow, and become one of the developed countries. Outside the Western world, there's only one area that has shown the possibility of emerging out of middle income trap, and that is East Asia. Japan, South Korea, Taiwan, Singapore, Hong Kong emerged out of middle income trap. There is no other case study outside East Asia and the Western world, and by Western world I mean European-dominated societies, where countries have been able to emerge out of middle income trap. And the key fundamental of that is that these countries are based on principles of Western civilization, and East Asia is the only area that has attempted to copy, emulate, and accept the Western civilization in principle. Now, a lot of people correlate democracy with liberty and Western civilization, which is completely incorrect. And that is what makes it very difficult to talk nicely about China, because China is not a democracy. But East Asians don't necessarily love democracy, which is actually nothing else but mob rule, which is about activism and a sense of entitlement and a sense of victimhood. People vote to transfer other people's money into their own pocket. That is what democracy eventually translates into. East Asia has bypassed, has mostly ignored stagnation, loss of productivity, and destruction of culture by having democracy. They have accepted the Western values, but they have ignored mostly the cultural Marxist ideas that have emerged in the West in the last few decades. So let's look at some of the other facts that underpin, that provide the pillars of growth to China going forward. Increasingly, Chinese students who get educated in the West are deciding to return back to China. Ladies and gentlemen, which other third world country you know of where once people get educated in the first world, they voluntarily return back home? I can think of only China. China's contribution to high technology, artificial intelligence, autonomous cars, has grown absolutely exponentially over the last few years, so much so that China is now either the top country in that respect or just number 2 after the United States. In fact, this slide is already outdated because I was reading on the plane that now China already has more startups worth more than $1 billion than the United States has. This underpins the future of Chinese growth continuing in the short and the middle term. But my view is that China will continue on its path to becoming a developed country. And the reason is, note this thing, this is a book translated into Chinese. And when I go to small cities in China, I see bookshops that are multi-story bookshops where you can find books that have been translated from English to Chinese. The question, ladies and gentlemen, is which other third world country have you been to where people have reading habits? I tell you, there's only one country that I know of, and that is China. There's virtually no reading habit in Africa, the Middle East, and South Asia. This friend of mine, Mary, retweeted something which very nicely summarizes my feeling about East Asia, and I spend a lot of my time in East Asia. John Roberts, who tweeted a few days back about his life in East Asia, he says that having lived in Beijing, Seoul, and Singapore, he now thinks that East Asia is like Jetsons, when he now thinks that the West is more like Flintstones. Now, this is, of course, a bit of an exaggeration, but it conveys the point how productive, modern, and creative East Asian societies are. But people are stuck on difficulty in consuming chewing gum in Singapore, or restrictions on drug usage in some of these countries. The reality is very different about East Asia. East Asia is one of the safest places on the planet today. But let's move on from the world economy to mining and metals, metal pricing. Now, I have talked about how consumption of absolutely every commodity has grown exponentially over the last few decades. What has the price of those commodities done? In the last 2.5 years, this is copper, but it could be any other metal really. Copper has done quite well. It has gone up about 40% in the last 2.5 years. Copper mining companies have done even better. Exactly the kind of performance as an investor in mining I would have expected. But this slide is a bit deceptive because I have selected a time frame that suited my talk on this slide. This is a better reality of the situation. Copper price is actually down in this time frame, and copper mining companies have done worse than copper. So the question is that why is it that despite exponential growth in consumption of commodities, commodity prices haven't really given me a lottery ticket so far, a winning lottery ticket so far, and why have mining companies consistently lost money for me? This is what Mark Twain said, that a mine is a hole on which a liar stands. During my time in the mining industry, my view is that this is no longer true. What is now true is that we don't depend on an external liar anymore. We lie to ourselves. Speculating in commodities is an almost impossible job. You need to know the production profiles of hundreds, maybe thousands of mines around the world and how their production can change because of change in prices of commodities. And then you also need to understand the demand side of the equation and how technology is changing the demands for those commodities and how it affects the pricing of those commodities. In my view, that is an impossible job. But I would at least leave it to the experts, commodity experts, to work on that the future of surplus deficit situation and hence the future prices of those commodities. And strangely, however, a lot of investors in the mining industry have come to see themselves as commodity experts. They speculate in commodities and they finance mining companies to a level that they actually end up shooting at their own feet because they contribute to exponentially increasing the supply of commodity, so much so that the exponential growth in consumption of commodity is overshadowed by overproduction. There's, of course, another side of the same equation, and that is that a lot of investors invest for leverage, in which they like to invest. They make sure they invest in uneconomic projects so that when commodity prices go up, the share prices, in their opinion, would skyrocket. I have almost never seen that happening. And the reason is uneconomic projects stay uneconomic irrespective of the commodity pricing. And then, of course, these people do crazy kind of valuation to put some value on these uneconomic projects because otherwise the value of these uneconomic projects is zero. So let me conclude myself here. I think there's a lot of legs left in continuation of Chinese growth. China has the underpinnings that will hopefully make it a first world country. A lot of things can go wrong. My view is that the first world is heading in the right direction right now, particularly countries and societies that have chosen Trump and the far right. This will aid the free market in the first world. and hence economic growth. I love to understand what's happening in the third world, but I suggest not to look at them for its influence in the world economy and its influence on metal consumption. But finally, as investors, we should invest for value, not for leverage or for commodity speculation. Ladies and gentlemen, thank you very much.